This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. India and Indonesia have emerged as key beneficiaries of a Chinese ban on Australia's coal exports, which is expected to further shift global trade in the fuel used for power generation and steelmaking this year. Australia, the world's biggest coal exporter, will continue to benefit from growing Indian demand for its coal, made cheaper after it was shunned by China, analysts said. Coal traders and buyers expect India's buying spree of Australian coal to last into next year due to its price and quality. China has targeted various Australian products with unofficial import restrictions since March 2020 as relations between the two countries soured.
Australia has proposed to expand the government's powers to call back former title holders to dismantle offshore oil and gas facilities at the end of their lives if an existing owner fails to do so, a move opposed by the industry. The government wants to impose the trailing liability provisions to protect taxpayers following the collapse of a small company that operated a field off northwest Australia, which left the government with a decommissioning bill of more than $205 million Australian dollars. It is important to strike a balance between implementing regulatory safeguards for Australian taxpayers, managing the impost on industry while encouraging continued investment in oil and gas development, Resources Minister Keith Pitt said in a statement.
Moving on to the top news in the energy sector.
In order to wean Saudi Arabia off its dependency on crude, the kingdom needs higher oil prices. A multi-trillion-dollar spending push designed to diversify the economy's sources of income will require state companies to cut the dividends they pay the government to boost capital spending, Crown Prince Mohammed bin Salman has said. It is not clear how much companies like oil group Saudi Aramco, whose $75 billion dividends last year were vital to support state revenues, would cut their dividends, but any reduction would likely need to be compensated by higher oil prices, analysts say.
U.S. Treasury Secretary Janet Yellen on Wednesday released details of a tax hike proposal that would replace subsidies for fossil fuel companies with incentives for production of clean energy in President Joe Biden's infrastructure plan. Linked to the $2.3 trillion infrastructure package, it is part of a wider plan that includes boosting the corporate income tax rate from 21% to 28%. A Treasury Department office estimated that eliminating subsidies for fossil fuel companies would boost government tax receipts by more than $35 billion in the coming decade.
Next, we have the top news in metal markets.
Copper prices climbed on Thursday as concern about available supplies and a lower dollar reinforced bullish sentiment, but rising inventories capped gains as the market awaited trade data from top consumer China. Benchmark copper on the London Metal Exchange (LME) was up 1% at $9,008 a ton at 1550 GMT. Prices of the metal used widely in the power and construction industries are down 6% since hitting 9–1/2-year highs of $9,617 last month. Copper prices have settled around $9,000, not $8,000, which tells you the market is fairly tight, said Guy Wolf, global head of analytics at Morex.
Gold prices hit their highest level in more than a month on Thursday as the dollar and U.S. yields dropped, and the Federal Reserve's reiteration of its dovish policy stance also lifted bullion's appeal. Spot gold was up 1.1% at $1,756.93 per ounce by 1419 GMT, having earlier hit its highest since March 1 at $1,757.82. U.S. gold futures gained 0.9% to $1,756.50. The dollar and U.S. yields are coming off, and that's the key catalyst right now. A pretty unimpressive jobs number is also helping push gold higher, said Bob Haberkern, senior market strategist, RJO Futures. We will now look at the top news in the agricultural sector. World food prices rose for a 10th consecutive month in March, hitting their highest level since June 2014, led by jumps in vegetable oils, meat and dairy indices, the United Nations Food Agency said on Thursday. The Food and Agriculture Organization's Food Price Index, which measures monthly changes for a basket of cereals, oilseeds, Dairy products, meat and sugar, averaged 118.5 points last month versus a slightly revised 116.1 in February. The February figure was previously given as 116.0.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.